Welcome to our presentation on leverage trading, a powerful tool that can help traders of all levels achieve their financial goals. Whether you're a seasoned pro or just starting out, understanding the basics of leverage trading is essential to success in today's fast-paced markets. Leverage trading allows traders to amplify their gains by using borrowed funds to open larger positions than they would be able to with their own capital alone. This means that even small movements in the market can result in significant profits. However, as with any trading strategy, there are risks involved, which we will discuss later in this presentation. Leverage trading is a technique that allows traders to control larger positions in the market than they would be able to with their own capital. Essentially, it involves borrowing money from a broker to increase your buying power and potentially amplify your gains. For example, if you have $1,000 in your trading account and use leverage of 10 to 1, you could control a position worth $10,000. If the price of the asset increases by 1%, your profit would be $100 instead of just $10. However, it's important to note that leverage trading also comes with significant risks. If the market moves against you, your losses can be magnified just as much as your gains. Additionally, using too much leverage can result in margin calls, where you're required to deposit more funds into your account to maintain your position. That's why it's crucial to have a solid risk management strategy in place before engaging in leverage trading. One of the key benefits of leverage trading is the ability to amplify gains. With leverage, traders can control larger positions with a smaller amount of capital, which means that even small movements in the market can result in significant profits. For example, if a trader has $1,000 and uses 10 to 1 leverage, they can control a position worth $10,000. If the market moves in their favor by just 1%, they would make a profit of $100, or 10% of their initial investment. Another advantage of leverage trading is access to a wider range of markets. With leverage, traders can take positions in markets that would otherwise be out of reach due to high capital requirements. For example, a trader with limited capital may not be able to invest in commodities like gold or oil directly, but they can do so through leveraged products like futures or options. Leverage trading can offer significant potential rewards, but it also comes with a high degree of risk. One of the biggest risks is the possibility of significant losses. When using leverage, even small price movements can have a big impact on your account balance. It's important to have a solid risk management strategy in place to help minimize these losses. Another risk of leverage trading is the potential for margin calls. If your account balance falls below the required margin level, you may be forced to close out positions or add more funds to your account. This can lead to even bigger losses if you're not careful. To avoid margin calls, it's important to monitor your account balance closely and use stop-loss orders to limit your risk. Having a professional approach to leverage trading is essential for success in this field. This means having a solid trading plan that outlines your goals, strategies, and risk management techniques. It also means having the discipline to stick to your plan and avoid emotional decision-making. One example of a successful trader who follows these principles is Warren Buffett. He is known for his disciplined approach to investing and his focus on long-term gains rather than short-term fluctuations. Another example is Paul Tudor Jones, who is renowned for his risk management strategies and ability to navigate volatile markets. In conclusion, leverage trading can be a powerful tool for traders of all levels. It allows you to amplify gains and access a wider range of markets, but it also comes with risks that must be managed. By taking a professional approach to leverage trading, including having a solid trading plan, risk management strategy, and discipline, you can increase your chances of success. Remember to always be aware of the risks involved and to never trade more than you can afford to lose. With the right mindset and approach, leverage trading can be a valuable addition to your trading strategy.